Ready to elevate your credit understanding and score? With insider tips and a plan, you can take action to improving your score, which can save thousands in unnecessary finance charges. Let's tackle today's topic with your coach, Credit Christy.
Hey friends, it's Christy, your credit coach. Thank you so much for joining me for another episode. Today, let's answer the question, is it better to have no credit than it is to have bad credit? There are millions of people out there that are credit invisible, which means that they just simply have never started a credit profile. They've never borrowed any money on a loan or opened a credit card, anything like that. And then there are millions of people out there that unfortunately have a bad credit rating. So what might warrant a bad credit rating? Typically 620 or under is going to fall in that bad category. Usually 620 to 669 or so is fair. And then once you get to 670 and a little bit higher, it tends to be good. And then great, in my opinion, would be 760 or higher. And it goes up to 850 if you are wondering how high that scale goes. But when it comes to bad credit, I feel, in my opinion, that it is worse than having no credit whatsoever. So let's break that down. Why would bad credit be worse than having no credit? Well, when you have bad credit, it's typically because of non-repayment. So you went into an agreement with a creditor and you said, I'm going to repay this debt at this time. And then something happened and you weren't able to. Then it shows up as late payments. It could result in a collection. Now, if you were going to go and apply for credit somewhere else, let's say you were applying for a mortgage or for a car loan, the decision maker of if they're going to offer you financing or not is looking at your credit history. And if you can't handle the small things, like let's say a credit card or a buy here, pay here agreement, what evidence have you provided that you can handle the big things like a mortgage payment? Now, you might be thinking right now, well, I pay my rent on time, but my credit cards are a different story. Well, in most cases, your rent doesn't get reported to your credit report. Can you have it added to your credit report? You can. You can pay to have it added, and some property management companies do report it. They report it as an installment loan, which, if you're paying on time, should help your credit profile. But the majority of people out there that are renting don't have that showing up on their credit profile. So if all that somebody has to go by is the information provided, which might be late payments equaling a collection account, well, that bad credit is going to bite you in the butt. Now, let's move over to the scenario of no credit whatsoever. So you've never established a credit profile, meaning you haven't generated a credit score, and that's referred to as being credit invisible. And there are millions of people in America that are credit invisible. And although it could be difficult to start credit when you don't have any platform in which to start from, it's actually easier to start with no credit than it is with bad credit. So bad credit dug you in the hole a little bit. No credit just means you're starting from a place that you just have no evidence of your ability to borrow money and pay it back on time. Now, with no credit history, you will likely have trouble getting approved for certain types of loans. You might find that you aren't approved for a car loan if you have no credit history at all, or maybe even a mortgage. So what might be a remedy to that? You could ask for a cosigner to help you out. When I was 18, I financed my first car. I had paid cash for a couple of dumpy old rides through high school, and now I wanted a more reliable car after high school, and I didn't have credit established yet, so my father had co-signed for me. And it was actually better that he co-signed for me with me not having any credit history than it would have been if he were co-signing for me with a bad credit history. So hear me out. Let's say you are looking to finance a car or a house and you have a 500 credit score because you didn't pay a couple of different creditors. A lot of times, the company that you're applying with will either do an average or punish the interest rate because you, being the main borrower, have a lower credit score, even if your cosigner has an incredible credit score. Now, the flip side to that, if you didn't have a credit score at all and your cosigner has an incredible credit score, we're going to go off of the credit score of your cosigner since you don't have one to start off with. So do you see how that's advantageous to the bad credit scenario? Bad credit shows potential lenders that you have a track record of not really doing a great job of managing your debt. If there's a bunch of late payments, if there's some collection accounts, charge-offs, something along those lines. So if that might be you, that in a snapshot in time earlier in your life, you didn't do a great job of paying your bills on time, there's no better time than now to get started on repositioning that credit profile and setting yourself up for success. So what does that look like? You might have to get a secured credit card, which means you put your money down on that secured credit card and you borrow against it. It is going to be a higher interest rate, so my recommendation is do not carry a balance forward. If you start off with a $300 limit, keep that balance below 30%, so less than $100 against that $300 limit, and pay it in full before it's due so you're not paying that high interest. Have a great track record for 6 to 12 months, and now you might be able to qualify for a better interest rate on a better credit card, and then work to keep that next credit card long term. If you've listened to any past episodes, then you have learned that your credit algorithm of your score is really based off of your open accounts. So once you close that credit card, it doesn't help you unless it's a collection. It wouldn't hurt you. Now, when it is a collection or a charge off, it's going to have a really incredible negative impact on your score. But let's say you start off with a secured credit card, you have that for 6 months or a year, and now you qualify for a better interest rate on like a Capital One or a Discover card or something. If that secured credit card doesn't have an annual cost, then just leave it open and keep it with a zero balance. If they do have an annual fee, consider closing it now that you have the credit card that you've worked towards obtaining. Keep that balance as low as possible and always pay on time. Now, you could also obtain a credit profile without going into debt. You can ask to be an authorized user on somebody else's credit card. Now, you don't ever have to physically use that credit card. You are simply borrowing the credit history that they have established with that credit card. Let's say you ask mom and she agrees to make you an authorized user on her Discover credit card. And let's say she's had this card for 10 years. Once you are an authorized user, you now have 10 robust years of credit history added to your credit profile. So although we can't necessarily make those collections and charge-offs go away until they naturally drop off after 7 years of being reported since the last date of activity, you can help override some of that negative by having some positive. So look at being an authorized user on somebody else's credit card or setting up a secured credit card for yourself until you establish a repayment history to prove your ability to borrow money, pay it back on time. And meanwhile, no credit doesn't tell lenders that you don't know how to handle repaying debt. It just means that you don't have much experience, at least on paper. Now, I've seen where mortgages get approved with no credit scores versus a lousy credit score not being able to get approved if it's lower than the minimum credit score. So for instance, for an FHA loan with minimal down payment, a 3.5% down payment, the minimum credit score is a 580 credit score. But there's also something that's called a manual underwrite, which means we can kind of create a credit repayment profile for you if you don't have any credit scores. So let's say you have no credit history as far as borrowing money on your credit report. So you don't have a loan or a credit report, but you do have payment obligations to other places, such as your rent, utilities, your cell phone bill, insurance, those kinds of things. If you pay that monthly, we can kind of create a profile for you and then get your loan approved based off of at least 12 months worth of history for those other items. Sometimes apartment buildings won't rent to you if you have a lousy credit score, but if you just have no credit, but you can show your ability to make some payments on time, maybe getting 12 months worth of cell phone bill payments or something like that, and showing stable income and providing your pay stub, I've seen where apartment buildings will extend a lease to you. I've got lots of episodes on this podcast talking about how to improve your credit, how to repair your credit, how to protect your credit, and even how to freeze it. So if you'd like to dig into any more of those, scroll through the titles of my prior episodes and find something that can really impact your knowledge and hopefully your life. And if you're looking to build credit without going into debt, there's an episode for that too. So what hurts you the most if we had to compare bad credit to no credit? Definitely having bad credit is going to hurt you the worst. Also, it's really hard to dig out of that hole. It's hard to reestablish yourself because now it usually has to be secured credit cards or, for instance, a car loan at a buy here, pay here, which means you're paying an insane interest rate. And that means most of your payment is going to paying interest and not paying down that balance, which quite frankly puts you in a little bit of a rut, right? It doesn't help you get out of debt. Where having no credit history, it doesn't mean you're not going to get approved. It just means you might have to provide some additional information. So if you're one of the 53 million Americans that don't have a score, you can create one for yourself even without going into debt. You can report your rent on your credit report. There are a lot of companies. Just Google the phrase, how do I report my rent on my credit report? And there's a bunch of companies. Please do read the small print. There are fees and requirements involved, so make sure you read that. And back to that authorized user setup, that's a great way to have an exceptional history added to your credit profile. And you might find that you have an exemplary credit score almost right away. And if you are looking to better understand finances, check out my book on Amazon called Finish Financially Free. Hey, if you have any questions, reach out to me at questions@creditchristie.com. And until next time, my friends, stay well.
Subscribe now and share with a friend to stay in the loop for new credit content and insider tips to maximize your credit knowledge. And follow Credit Christie on Instagram.